Hello traders, Gary Wagner with the Gold Forecast here. It is Sunday in Honolulu, Hawaii. That means it's Monday in Australia and Hong Kong, start of the trading week, and this is the Daily Report. We do have a small little rally going on in gold right now, 1373, 1374. We're looking at a 60-minute variable chart, and I want to put your attention to something I find quite interesting. If we take a look at these top areas right in here, of course, if we extend this line over, and let me try to match that up as well as I can. What you're going to notice is it does appear, at least tentative on the shorter term chart, that we have found some support at 1360. Now, this bodes well for the fact that after the knee-jerk reaction we received on Thursday and Friday, pushing commodities as well as gold lower due to the Chinese making one statement: they are going to raise their interest rates. I think that you see that I believe that was an overreaction, and we do have what we'll call buying the dip mentality and safe haven buying re-entering the market. Traders, another piece of what I believe to be fairly compelling data right now when we look at the market itself is I've run a basic Fibonacci retracement from the entire wave, meaning from 1 up until 5. And as you can see, this is going to be 100, and this of course is going to be 0 here. And if you look at our 23% retracement, which is a nice typical retracement for the fifth wave correction right in here, you'll notice that it does appear also that we have some tentative support. And so I am looking at the possibility of this market having no further corrections at this point. Now, it's a little bit too early to tell, but we're not seeing the follow through. Of course, we're going to have to watch how it trades in London and then New York tomorrow morning. But as of right now, it is quiet, but it is in fact trading higher. And traders, yet another view that I want to take a look at today. This is a 240-minute chart. So that means that each candlestick represents roughly a 4-hour time span. What it allows us to do is really break up the day into a couple of components so that we have, I think, a clear idea of different parts of the trading session and how it relates. As you can see, we did get this top that came in 1424 right in here. As the market sold off, though, you notice that we have this long down day. This is that part of that $40 down day. And what I'm finding interesting here, this is an on-neck pattern, or what I'll call an incomplete piercing line, and we do have a confirming candle. So we have had the market come off this low, and you can see that it is building back to the upside. Now, you realize that on Friday I recommended that we take our stop to the market. We did get out in a loss. Mostly safety was involved with that decision. As you know, I'm not afraid to buy the breakout. I'm not afraid to buy the dip. I am remaining bullish in this market, but I didn't want to leave us unprotected, so to speak, over the weekend in case the market would continue to fall. Once we have strong confirmation, and by that I mean that we have follow-through buying in London and New York, we will look to re-enter this market from the long side. Of course, on Sundays we typically have a very quiet day, and therefore the actual report that we're going to have is going to be short. So let's take a look at if in fact we're going to see follow-through buying. If we are, I'm probably going to make a recommendation to enter the market from the long side and see where that market wants to move. Now traders, how does that actually affect our wave count? And I've been giving that some considerable study through the weekend, and here's what I'm looking at. Right now, of course, we have the top of wave 3, we go to 4, and then to 5 here. If in fact the market continues to trade lower and breaks through the bottom of this fourth wave around the 1313 area, then in fact that tells us we have gone into a full-blown correction, and I would look for corrective waves A, B, and C. However, if the market recoups at this point, realize that as the market moved higher and then came back down here, it's now trading within the area of this third wave, which means if it does move up, then it was simply what I'll call a subwave or a minor wave within that longer wave 5, and wave 5 will still in fact be intact. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Monday. Bye-bye.